Investors and traders, welcome to the channel. Market Chat Pattern. Today is 12th of May 2024. Hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US markets. We will be taking a look at the debt markets through the eyes of the bond futures for the treasuries for the United States. And then I'm not going to cover the dollar index or the gold market because I've already done a separate video for it. So I would recommend you go and watch that, and I will put a link to that in the description and also towards the end of this video. And then we'll take a deep dive into the stock indices, and it's been a pretty interesting week. So what we are going to take a look at right now is in this screen, what you see here, these are the standard deviation levels. These are the ranges that we are expecting the market to move in next week. What you see in the top column here, these are the weekly levels. So on the weekly chart, longer term, these are the plus standard deviation, plus 2 standard deviation, minus 1 standard deviation, minus 2 standard deviation levels that we will be watching for. If the markets begin to close below or above plus or minus 2 standard deviation levels, then that's something to actually take a lot of notice into, because these are the kind of maximum levels that we are watching for. And then in the bottom half, what we see is the daily ranges, and these are the levels for plus 1 and plus 2 standard deviation and minus 1 and minus 2 standard deviations. We'll be watching for the daily, so that's going to be for 13th of May 2024, and this is the VIX close for the last Friday. It does say 12th May because I'm doing the video on 12th May. Okay, further what you can also do is you can actually construct some of your own levels by having a half standard deviation or 1.5 plus standard deviation, so in between these. And the way you can do this is basically you can just take these points and you can multiply them or divide them accordingly, and then add to the closing price of the respective index from last Friday. And I've used the VIX data for all of these, and some people like to use VIX N for NQ. That's fine. So my data might be a little bit different to others, but normally these are fairly close by. Okay, so what we are taking a look at right here in this chart, this is the Dow Jones Industrial Cash Index and Cycle Analysis. This is a timing model that we have been following for quite some time. For the new subscribers, welcome to the channel. I've done a detailed video a few months ago where I explain what these how it's constructed. So you can find that video in the archives, and if you're not able to, put that in the comments, excuse me, and I will put a link to that video where I go in depth how it's constructed here. So what we want to know here is that we have a key date of 24th May to 29th May 2024, where we are looking for the possible end for the correction. And the way the timing works is we have to give it plus 1 to 2 trading days on either side. So we have that range that we'll be watching for, with plus 2 minus 2 trading days on either side of this range. Based on this model, we think that we are actually still in a time period which is associated with the market correction. So we'll just move forward with that assumption, and then we'll take a deeper look into the stock indices. And the markets have been pretty strong, so it's really interesting. Okay, so now we'll just begin to take a look at the bond markets. So we'll start by taking a look at the 2-year treasury note. And here, already last Friday, covered some of it already. So just do a brief one. And here last Friday, we can see some yields actually begin to move up here. Next week is, so the past week in terms of the economic news was fairly dry. But the next week, we have key data coming out related to inflation, So with that data, it is expected that there's going to be a fair amount of volatility coming into the markets, and some of these levels that we are watching for, I think we'll begin to get to see some of those levels either hit or break, and finally we'll begin to see a resolution. Excuse me. Excuse me. I had to sneeze. Now, let's take a look at the longer term, 10-year treasury note. And here we can see again the yield was rising, and then on the extreme 30-year long bond future, here we go. I will actually move on to the weekly chart because we want to take a look at the longer picture. So what we can see is that this market last week tried to rally, but it's in a formation where it's right at the 78.6% retracement. It's above that actually from this low. Let me actually bring 61.8%. Yeah, so just hovering around that. And there is still a chance that it is actually putting in a internal low, and we could see an ABCD move higher, which we have seen in the on the daily chart here. So this pattern that we have been watching for is still valid in my opinion, because of the potential of a double bottom around here. But this market really needs to give us further clarity by breaking the bearish symmetry and moving above this channel. And similar thing on the TLT as well. So moving on to this weekly, and here we can see that similar kind of pattern formation. The market has to do quite a lot of work, but the good thing is that it seems that this market is actually finding buyers or support coming around this level. So if this level goes, which is 87.34, then I think we are just going back to the lows. And on the daily chart, the really key level that we're watching for this market to break is 90.40. That's going to be the level, and that will give us comfort that probably we have started a leg higher again in a bear market, but we could be rallying for several months, so that's a possibility. Okay, now we'll go and take a look at the stock indices. So it's been a really interesting week last week. Let me actually move to the weekly chart, and then we'll move to the daily chart. And here what we see is, look, we have a very strong market for the past 3 weeks. It has retraced. Really, it's very close to the all-time highs here. So it's been a really strong move, but it's also a little bit confusing when we begin to take a look at some of the other indices, and we have to decipher what the price is trying to tell us. So my belief is that we are in a situation, now I'm going to move back to the daily chart, where we might begin to see some of these indices actually, some of the indices and also ETFs move as high as these highs, and maybe some of them might actually attempt to take these out, and some of them might give us a little bit of a different picture. But based on our timing model, I think we have got at least 2 more weeks of that correction to go. But with a move like this, which has retraced so much of it, this is a really interesting development, and whether we will see this one-to-one price projection move to the downside, or whether it's going to come around here somewhere, retrace anywhere between 61 to 61.8% to 78.6%, and find a fair amount of value coming in from there, and then start a move higher. That remains to be seen. So that's one possibility now. But the interesting thing is, I'm going to clean up this a little bit. So if I remove this and also even remove this, so here, this market on the cash S&P 500 last Friday closed above with this doji candle formation, which is indecision. So I don't like this candle, and we'll have to wait and see how this market is going to trade next Monday, whether it's going to leave an island reversal, if meaning that we have a down close, or whether we just continue and try to take these highs out. Also, if you look at, this is something which we had been watching for on the on the 60-minute chart, if we just actually take this and just copy this, just trying to see if we have we also have sort of a channel formation here. It could also be thought of as a wedge formation if we draw it like this. So maybe the market is testing the upper part of this channel formation, and then it might begin to come back into the channel, and we'll have to wait and see what the price action will unfold. Now, if we just take a look at it on the SPY, we have something similar, and here we can have a trend line like this, and then again, you can see this a wedge sort of a pattern around here as well. So the possibility exists that it will go and test these highs around here, and if there is going to be a down move, then one of the possibilities is whether it could come down right to this 61.8%, 70. So in this region, which will become more of a region of interest for buyers, and maybe the market finds support around here, because moving back to the SPX, one of the things that we were watching for was three possibilities, that maybe the 19th of April was the orthodox low, so the market actually moves up and forms new all-time highs. The other was that the market comes back and tests these lows and form another internal low, so maybe somewhere in this region, maybe test these lows a little bit lower and then ends the correction. And the third possibility was this ABCD formation here. Now, with this kind of a move, I think the chances of this 19th of April being an orthodox low are actually increasing. So if the market moves lower, then the region that we will be watching really carefully will be this one, and I'm going to draw a box around here, around this one, and I'm going to actually remove this to make the chart a little bit clean. So that's going to be our value area to watch. There is another possibility, and that possibility is that in terms of time, this one is more related to time, because we have had a fantastic move since the late October to the March of 2024, so late October 2023 to March 2024, that we could in fact be in a move like this, the kind of move that we had seen in July 2023 till ending in October, but happening in March now. So that top actually corresponds to this top, and what it means is that we could see this sort of choppy price action, which could basically go for quite a while till about 3 months, because this move was about 3 months, and then that will take us from March to into 3 months will be sometime in June, towards the end of June, and then we will see a really big move to the upside, a really strong one, just the way we saw in October 2023. So that is one possibility, and what I'm trying to say is that if that sort of situation happens, it might be more on the time side than on actually the price side. So we might still actually see lows, but we might not see very deep retracements. Maybe we come down to about 48.21, which is the 38.2% retracement, but we take quite some time for that to form, and then we have a fantastic move higher with the resumption of this bull move for the market. Now, the interesting thing is that the cash indices have been doing something a little bit different to what the futures have been doing. And for the shorter term trading, I like to follow futures and the cash markets more for the longer term. And here what we have is that this is something a little bit different. If you look at on the ES E-mini futures, that it went right to the 78.6% retracement and closed with this doji formation, which is something it's like a silent doji. This is what we talked about last Friday, so I'm not going to go more into details of that. And what it means is, the cash is above this, but the futures are lower. So, I'll just go back to the cash again. Here we go. Here. So maybe next week we'll begin to get more resolution because of the economic data coming out. I believe we have some Fed speakers also speaking. We can have a look on the Forex Factory for that. So keep that in mind. And on the futures, it just went to the 78.6% retracement. It'll be really interesting how this market is actually going to open tonight. And if we see the market actually opening with some sort of a gap lower, then we could see some sideways trading to maybe lower price action. And then if we go and have a look at the QQQs, or let me actually NDQ. So this is the cash for the NASDAQ. And here we can see, if we just take a retracement, this market just slightly above the 78.6% retracement, and we have that sort of kind of a wedge formation here as well. And if we just go back to the futures, this market also went right to the S&P, to the 78.6% retracement. So we have S&P 500 E-mini futures, we have the NASDAQ futures going right there, but the cash market's going a little bit above. And if we were to look at the QQQ is also right at the 78.6% retracement. And the interesting part about the longer term QQQs on the weekly chart is that we have this ABCD price formation. We were looking for 450. We pretty much got there. And if we were to look at XLK on the longer term as well, slightly different pattern here, but again it also came very close to the 1.618 expansion on the 216 level that we're watching for. It retraces right to the 38.2% retracement, and we see 3 consecutive weeks for a rally, but it's nowhere close to the top around here. Something a little bit different to what we see in SPY, for example. And now we also take a look at the YM. So this is gonna be the Dow Jones E-mini futures. Again, we can see that on the weekly chart, really strong looking week, and the market, for 1, 2, 3 consecutive weeks, really bullish price action. And if we go down to the daily chart, here we go. This is what we see. This market also reaching the 78.6% retracement, although the close was not negative, or there were more buyers for this one compared to some of the other indices where we had that doji formation, more like a silent doji. We see something a little bit different for this index. So very interesting formations for this one. And the other interesting thing is something which we spoke about. We have this potential double bottom formation around here coming in on the 19th of April. So the market is giving us mixed signals. In my opinion, it is slightly bullish, but we still need to be cautious of these moves, and take any action based on as much information as we can gather. And then let's take a look at the Russell 2000. Now this one is really interesting. Russell 2000, this index here, right at the 61.8% retracement, tried to rally but closed below that for the day. And if we look at it on the weekly chart, here we go, we can see that similar to the Dow Jones, potential of double bottom here, but it really needs to close above these levels of 2096, which is 78.6% retracement, if it's actually rallying in an ABC formation. But this looks like maybe we have this left shoulder head and a right shoulder being formed, and the bottom of this channel will get tested again. So that remains a possibility. And if we just look at IWM, which is the ETF for Russell 2000, I'm just gonna go back to the daily chart. Here we go. Very similar to what we see in the futures chart. And here we go. it just missed the 78.6% retracement and just hovering around the 61.8% retracement. So this price action that we have seen past week in the US stock indices, it is a little bit for market technicians, a little bit um, how to say, mixed signals based on the kind of analysis we were doing and the levels that we were watching. And based on the cash market and the futures market, we see things which are a little bit different to how I had put the analysis right at the beginning of it. But again, this is what the whole market is about. We have to assimilate and watch and assimilate as much information. And yeah, so the market, in my opinion, is mildly bullish, but we still need to be cautious because from a timing model, we are in the last 2 weeks of the expected time for the correction. And I believe in the next week, with the economic data coming out related to inflation, we'll begin to gather more information, which is going to make some things more clear for us. And meanwhile, what is also expected is that some of these markets, some of these indices and some of these ETFs, they might be doing things different to one another, and especially the futures market, because we could see just the way we are looking at an S&P 500 cash market, these highs being challenged, and some of these ETFs, maybe these highs might get taken out as well, or coming very close to them, and the futures might be doing something different. So this is why when I'm doing my analysis, I look at the cash market, I also look at the futures, and then we also go and look at the debt markets and dollar index. We also take a look at the gold market as well to get as much information as possible, because the money will go where the money will grow. And all of this is a big cash flow chart. So money is always moving out of one asset class and moving into another one. So this is why it's really important to take a look at the debt markets, to take a look at the stock indices and metals market, to see where actually the money is flowing. So again, cautious on the market, with mildly bullish market conditions, and hopefully next week will give us further information, and we'll just keep on watching our charts for the cash markets and for the futures. So thank you very much for watching the video, and if you like the video, found it of educational value, give it a thumbs up. If you like how we do the technical analysis, then please do subscribe to the channel as well. And I have done a really good video on Bitcoin. So while we are at it, let's actually take a look at the Bitcoin. Here we go. So this is the Bitcoin is actually have been moving lower since March. This is the daily chart of it. And the other interesting thing is that the dollar index, the dollar has also been strong. It's been a little bit weak as well, but we are seeing this kind of a pattern formation, especially when it moved below the 60,000 level, because we were really watching the 38.2% retracement and the ABCD formation. And now there's a possibility, I believe it was done, no, it was done on a different all-time history chart here, and it was done on a log scale. Here we go. And I've done a video about this one, but I just wanted to show you, this is an attempt, this is basically Lucas series or Lucas time spiral, where it appears that the market is actually following these levels when it comes to these numbers really carefully. So I've done a video about it, and they're pretty much all the key ones, they line up pretty nicely with respect to the base around here. And then the 13th of March one, we have seen a number of these coming together here. So that gives us an idea that this 13th March high might actually be a pretty important high. And if we begin to, of course, move higher, then this means that this spiral analysis is not correct, and there might be something bigger here which might have been missed, and that's why the bigger cycle has actually pushed the prices higher. So but in the meantime we could expect some weakness to come in the market, which we have already seen since March. So just to keep this in mind, and I think this Lucas time spiral is a pretty interesting one to watch. So thank you very much for watching the video. Apologies the video getting a little bit longer. Last but not least, let's also take a look at the VIX as well. So I am actually going to go down to the weekly chart. Here we go. So one of the things is that as the market has been marching higher, the stock market, the VIX have been actually moving lower since the week of 15th of April, and it's getting to these levels which are, pre-pandemic levels. Here we go. And these are, if it begins to move a little bit lower, below 10, then it gets into these areas where we have seen some spikes in volatility. So maybe the market getting this quiet is very interesting. It's below its 20-day moving average as well. So we'll just keep on watching these levels really carefully. And the standard deviation levels that I give you is actually based on VIX anyway. This is why we do not cover VIX that much, but I thought it was really interesting that as the market has been marching higher, the VIX has actually all been coming down, which means that the volatility is actually down in terms of the expected ranges on daily basis and weekly basis. So with that, I'll just leave you guys. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.